Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, June the 11th, 2012. Well, a change of trend today, and we have a candle that's made a higher high and a higher low. The candle we're analysing is this large black body candle, and we can see that the trend previously was down. We had rejection from the 124.55 area, which is an important area, and today the market traded up through the 125.86 important resistance area. You can see that area is tested on 1, 2, 3, 4, 5, roughly 6 occasions, and the market sold off today. We've tested up above there, and once again we've found selling coming in. So that region is a very strong region of resistance for this market. We have a large black body candle with the sellers making very solid net bearish progress. So the sellers are not supporting this trend to the upside, even though we have a candle with a higher high and a higher low. The sellers have closed with very strong control of this market, and the buyers have lost commitment. In terms of the Fibonacci extension of the previous downtrend that the market was in today, we're examining the relationship of the downtrend to the previous time the market was trending down, and we saw price rejection from the 50% and 38.2% level. So they've held as very strong levels, and we've seen the change of trend in this market today, but on a very, very bearish candle. For the current Fibonacci extension, examining the current new uptrend, the market has been rejected from the 61.8% level in a very strong way. So that highlights how important sometimes these Fibonacci ratios in either the extensions or the retracements can be very strong levels to be aware of, and here we've seen the market open around that level, test just above, and sell off, and that coincided also with the market testing to the Kijun-sen. In terms of the retracement in the previous downtrend that the market was in, the retracement of the prior uptrend, the market tested to below the 50% level, and we saw the sellers lose commitment down around that level, coincided roughly with where the Tenkan-sen was trading, and we saw the trend change today. But at the moment, with this market in the uptrend, we're examining the retracement of the prior uptrend. The market did extend just below above the 100% level, and it's done that on a very bearish candle. So it seems that the 100% level will hold, and the market will potentially change trend. Now at the moment it seems as though there is a strong possibility that that change of trend will occur. We already have a candle developing that has a lower high and a lower low, but that candle is finding support at the 124.55 region, where we saw previous resistance, support, resistance, and then support. So that's an important level moving forward for this market. We did also have a potential head and shoulders, inverse head and shoulders pattern. Here's the prior downtrend, which is essential with all of the reversal patterns. Here's the left shoulder with the trough here, the head with the trough down at 122.87, and then the right shoulder formed today with the trough at just below the 124.55 level. The market did break out above the neckline, but with all of these patterns it's essential to have a close above or below the barriers, and in this case we want to see a close above this neckline, and the market failed to do that. We tested above there and the market's closed down around the 124.55 area. So essentially that pattern is basically negated now with the market to fail closing above there. Now it's little wonder, especially seeing this type of pattern form, we would have expected to see strong resistance around the Kijun-sen, and you would have been very wary of this pattern being confirmed with close by strong resistance. In terms of Ichimoku, the market is bearish in the long-term time frame and the medium-term time frame by trading below the cloud and the Kijun-sen, and neutral in the short-term time frame by trading right at the Tenkan-sen. The Tenkan-sen and the area around 124.55 will offer a strong support for this market. If we do test below there, we have support extending now down to 122.87, and no support until the market trades down to 121.55. To the upside, the market will now face resistance once again at 125.86, and then around these highs of this neckline, these peaks, which is just above the 125.86 level, so we have a zone up to 126.26, and then strong resistance at the Kijun-sen, which is at 126.76.